Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Recently, a viewer submitted his portfolio to me. If you want me to review your portfolio, send screenshots or a video of your portfolio to me on Instagram at Robinhood Investor or email me at robinhoodinvestor2@gmail.com. So taking a look at his portfolio. So first stock is Amazon, which makes up 16% of his portfolio, currently up 30.4%. Next is Intuitive Surgical, which makes up 12.87% of the portfolio, up 7.79%. Alphabet, or the parent company of Google, makes up 9.52% of his portfolio, or down 0.57%. Next is Facebook, makes up 9.84% of his portfolio, currently up 2.72%. Next is Mastercard, makes up 8.96% of his portfolio, down 6.4%. Alibaba makes up 9.14% of his portfolio, down 4.54%. Visa makes up 5.69% of his portfolio, down 10.86%. Adobe makes up 8% of his portfolio, up 25.25%. Microsoft makes up 3.64% of his portfolio, up 14%. Boeing makes up 1.21% of his portfolio, down 62%. Autodesk makes up 3.59% of his portfolio, up 12.48%. Booking Holdings makes up 2.23% of his portfolio, down 30%. PayPal makes up 4.86% of his portfolio, up 52%. So I'm going to go over each of these individual stocks in Robinhood. So going to Amazon, ticker symbol AMZN. They're in the e-commerce space and also provide cloud computing services. Currently up 26% this past year, and past 5 years up 454%. And they've been doing very well during these times because people need to get their products delivered instead of going to the store. And this is one of the trillion-dollar companies next to Microsoft and Apple, currently valued at $1.2 trillion. They don't pay any dividend yield, so all profits are reinvested back into growth. And I think Amazon's a good long-term position to hold just because the trend is going towards online e-commerce, online retail, and they have a strong presence in the online space. And I think they're going to continue growing that, and as well as their Amazon Web Services, which is also a growth driver. Next is Intuitive Surgical, ticker symbol ISRG. So Intuitive Surgical, they provide the Da Vinci surgical systems and related instruments and accessories for invasive surgery. So during these times, elective surgeries are not going to be performed, but as things get better, more and more people will feel safe to perform these surgeries. So past year, up 6.4%. Past 5 years, up 216%. Market cap is $60 billion. And dividend yield, there is none, so they reinvest all profits back into growth. I think these are one of those stocks to buy and hold for the long term, just because there's always going to be a demand for surgeries, and their product is one of the leaders in the space. Next is Alphabet, parent company of Google. Past year, up 15%. Past 5 years, up 151%. Market cap is $937 billion. They don't have a dividend yield because they reinvest all profits back into growth. So their main revenue is from advertisement, and during these times, less people will buy advertisements, but it's one of those things where when things get better, search advertisement driven by search and other products will also pick up back up. Next is Facebook. So both Facebook and Google form a duopoly in the advertisement space, the online advertisement space. Past year up 13%, past 5 years up 167%. Market cap is $600 billion. They don't have a dividend yield, so they reinvest all profits back into growth. I think Facebook is also a good long-term position to hold just because they have a lot of users on it and they're trying to generate more revenue streams through their different services. So they own products like Facebook, Instagram, WhatsApp, Messenger, and Oculus, and they're one of the product social media with the most users on it. And when things get better, people will continue to advertise on Facebook. Next is Mastercard, ticker symbol MA. This is the second largest payment processing company. Past year up 10.98%, past 5 years up 198%. Market cap is $280 billion. Dividend yield is 0.57. And I think Mastercard is a great long-term hold just because people will continue to use Mastercard products as well as Visa products. And both of these players in the space, they just continue to collect their transaction fee from the vendors and businesses as their customers use their technology. Next is Baba, Alibaba, ticker symbol BABA. So they are also in the e-commerce space and provide cloud services. Past year up 18.93%, past 5 years up 135%. Market cap is $546 billion. No dividend yield, so they reinvest all profits back into growth. And Alibaba is one of those great long-term positions to hold, and they have exposure not just in the Chinese market but all over the world. And analyst ratings give 100% buy. So great position to hold. It's a leader in the space, especially in the Chinese market and internationally. Next is Visa. Similar to Mastercard, they're also the leader in the space in payment processing technology. Past year up 12%, past 5 years up 164%. Market cap is $390 billion and dividend yield is 0.65. So Visa is one of those positions I would continue to increase as a long-term hold. Next is Adobe, ticker symbol ADBE. So Adobe, if you're in the creative space, they provide digital products, digital marketing, and media solutions. So the Adobe Suite is one of those products that you use if you're in the creative space. Past year up 29%, past 5 years up 378%. Market cap is $176 billion, and dividend yield, they don't have any, so they reinvest all profits back into growth. I don't have a position in Adobe, but it's one of those stocks I'm tracking on my portfolio and will add a position once I see a great price to enter. Next is Microsoft, ticker symbol MSFT. So Microsoft provides enterprise solutions, software, services, devices. Past year up 42%, past 5 years up 283%. So most valuable company that's publicly traded. Market cap is $1.39 trillion and dividend yield is 1.11. In terms of analyst ratings, 88% give it a buy. Microsoft, I would also continue to increase my position when I get the opportunity to buy. Next is Boeing, ticker symbol BA. So Boeing is in the aircraft, industrial, aerospace, defense, security system space. Recently, they haven't been doing too well due to a decrease in demand in travel. And with all the airlines not wanting to buy more planes, then Boeing took a significant hit. As you can see, past year down 65%, past 5 years down 17%. If you're a long-term investor, this is an opportunity to buy, but it'll take a while before the demand for travel will get back to normal. Market cap is $67 billion, and dividend yield, I don't think this is accurate, but yeah, they pay a dividend yield. In terms of analyst ratings, most of the analysts give it a hold rating, but personally for me, I'm just going to continue holding my position. Autodesk is the next stock, ticker symbol ADSK. So Autodesk engages in the design of software and services. If you're in the engineering or manufacturing space, Autodesk is the product you use. So past year, up 3.29%. Past 5 years, up 215%. Market cap is $39 billion. And dividend yield is 0, so they reinvest all profits back into growth. Now in terms of analyst ratings, 62.5% give it a buy. Next is Booking Company, ticker symbol BKNG. Past year down 22%, past 5 years up 15%. So Booking is in the online travel and related solution space. So since there's no demand in travel, then this took a significant dip. But I think once things pick back up, then Booking would also see an increase in revenue. But in the meantime, it'll continue to dip. So similar to Boeing, I think this will take some time before it gets to normal capacity. But if you're a long-term holder, then this is a position to get into. Last but not least is PayPal, ticker symbol PYPL. They are a digital payments solutions company. So this includes PayPal, Venmo. Those are some of the big products they use. Past year, up 28%. Past 5 years, up 281%. Market cap is $170 billion and no dividend yield. So they reinvest all profits back into growth. Now in terms of analyst ratings, 88% give it a buy. So that's all in this individual's portfolio. Overall, a lot of his positions are in growth stocks with great long-term potential and upside. So I think it's a great diversified portfolio. A little bit heavy on the technology side, but if you're a long-term investor, I think it's a great portfolio overall. Definitely, if there's any dip, I would increase my positions in Amazon, Google, Facebook, Alibaba, Visa, and Microsoft. Those are great positions. Continue to hold and add to those positions. That's all for this video. What are your thoughts on this portfolio? Comment down below. Remember to use my referral links below, and both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.